if there's one thing business hates, it's uncertainty. That does, though, seem to be the name of the game as we head into 2025. Goldy Hyder is president and CEO of the Business Council of Canada. Goldy, thanks for being with us.
Good to be with you.
So a lot of things that make it hard to create strategy, a roadmap, modeling, all of the things that people like to do with some kind of sense of certainty. I want to start with the kind of the mood as we wind up this year and look into next year. How do you think business in Canada feels?
Well, if all things are to be believed about what's coming in the fall economic statement, which is a week shy of being the winter economic statement when it's delivered, is a lack of confidence, a lack of credibility when it comes to the public management of the public finances. And I think it goes well beyond Ottawa. I think it goes well beyond business. I think Canadians are seeing that this is a government that has an addiction to spending with no growth accompanying it.
And so that leaves business feeling uncertain. One thing we did see, of course, the last time there was a President Trump in the White House is that business investment in this country seemed to freeze a little bit. Do you connect those two things, the unknown factor of potential tariffs keeping people sitting on cash, or is that part of a bigger problem we have of businesses not investing in Canada?
Well, I think the first big problem is right here at home. I mean, we have 3 out of 4 misses now on what was their own imposed fiscal anchor. We like to say here that there is no anchor in the fiscal anchor. And that is deeply concerning because that is about our own fiscal situation. So businesses and people who work in those businesses know that if you continue to spend more than you make, the deficit and the debt is going to result in either taxes or cuts. And that's not good. The other thing, of course, Amanda, and we've been warning about this for a long time now, is that you have to be prepared for a rainy day. Mm-hmm. Well, it's not just raining, it's pouring now. We have to invest in NATO. We have to invest in the border. We're going to have to manage the consequences of the tariffs. Unemployment has risen to 7%. Some say it could go even higher. This is deeply concerning because what you said right off the top of the introduction here is business loves certainty and predictability. And we don't have it, and therefore you have eroding confidence. And yes, Amanda, that does mean capital will move, and we want to prevent that from happening.
I want to talk about the mobility of capital in a minute, but there are also, of course, opportunities. Spending on the border, spending on NATO, those could be, of course, business opportunities for Canadian businesses if those happen in the way that they might. A strong U.S. economy, good for Canadian business and exporters. Is there some glass half full story here to tell?
You're absolutely right in terms of it being an opportunity, but it comes from controlling your own destiny, not being reactionary. The reality is Canada has a lot of what the world needs, not just what America needs, but the world needs. We've got to make sure we get out of our own way. Why are we still in a country that has interprovincial trade barriers? How do you go with clean hands when you have those barriers in place to say, look, we want you not to impose tariffs. We want more trade. We want more service orientation. We want more labor mobility. We got to fix what's wrong in our own country. How do you do that when we don't have sufficient permitting reform to get to those minerals that everybody wants, or to continue to help people decarbonize with the use of LNG and other technology and availability that Canada has to help the world? So this is a moment in which we can do more. And when it comes to security, we know economic security is national security. And what we have said is, in a recently released paper called Security and Prosperity, is let's build a defense industrial base with the United States, with perhaps some of our other allies, help ourselves and help others at the same time, grow your economy and make those programs that are necessary, social programs, sustainable, as opposed to being financed by deficit and debt, which one day just means they're going to be cut. And that's not the way you build public confidence.
All right, I want to ask you not a ton of time, but Donald Trump has now said anyone that wants to invest $1 billion or more in America will get fast-tracked. Now, he says a lot of things that don't come to pass, but does that make you nervous? In the fight for capital globally, we now have somebody who's throwing open the doors on regulation and review and saying, just bring me your capital.
Well, let's be clear. I mean, President Trump was elected resoundingly to put America first, and he is doing just that. I don't hold that against him or begrudge him in any way, shape, or form. We need to respond, and we need to do it not in a reactionary way. We need to take control of our own destiny, as I've said. Of course, he's going to go out and use tariffs and tax cuts and deregulation as a means of saying, please move your business to America.
Right.
That's fair game. We are competing in these democracies.
Goldy, thanks for being with us. Appreciate your time today.
Great to be with you.
Goldy Hyder, President and CEO of the Business Council of Canada. Well, Well, the labor market may be softening, but big wage gains have already been priced in. Will that continue next year? Lana Payne is president of Unifor. Thanks for being with us.
Thank you, Amanda. Good to be here.
So let's start with sort of the weakness that we are seeing in the labor market. It's coming off a period, a couple of years really, of what felt like a strong market. Does it feel soft to you? Has something shifted here?
Oh, something has definitely shifted, particularly in the last 6 months of 2024. And no doubt about it, we've seen the highest unemployment rate that we've seen in probably 7 years outside of our kind of COVID pandemic period. And I would say to you, young people are really feeling the brunt of it at the moment.
We have seen pretty strong wage gains, at least in certain parts of the economy, and those do get locked in for at least a year, in some cases with especially union contracts, multiple years. Is that good for labor? Have we seen some of those gains now at least kind of preserved for the next few years?
Yes, for sure. We've had an incredible 2024 at the bargaining table in most of our key sectors. I mean, obviously, this started in 2023 with those monster auto agreements and in the retail sector as well, grocery stores. And we were able to propel that into other sectors of the economy and have seen great wage gains, way more than the average that you would be seeing in the economy. What that is good for workers as we lead into what is going to be a very difficult 2025.
Do you worry that as we see some softness, and auto is a really good example, right? We've seen the volume of production fall sharply at the end of this year, that will turn into layoffs and that the higher wages that we've seen negotiated actually hurt jobs in the long run as companies can't afford it?
Well, obviously, I don't want to be in that place. I think we've done a lot to secure the investments in Canada to make sure that we're building and have a mix of investments, whether it's on the EV side or the ICE side of things. But interest rates have definitely not helped the auto sector when it comes to sales, no doubt about it. And the threat of tariffs south of the border, which we're all dealing with right now in Canada, definitely not going to help the auto sector, not going to help the Canadian economy. It's a disaster if President-elect Trump follows through.
And of course, there's a lot of uncertainty around that, Lana. In terms of the auto industry, is there a hope or even an assumption that given how important it is across the border to both countries, that it gets a carve out from any kind of tariffs that come?
Well, I believe that we're going to have to work harder than a carve out. We need an exemption from these tariffs. 25% across the board would be so dramatically impactful in a negative way on many sectors, auto being one. The forestry sector right now in Canada is already struggling with a multitude of problems, not the least of which is a softwood lumber tariff. And to add 25% on top of that, what I would expect to see from the federal government is an immediate move to backstop and make sure that we've got support for industries that could be negatively impacted by the threat of tariff. But the other thing, Amanda, that has to be a concern is that there's the tariff itself and then there's the threat of the tariff, and both are dangerous. The threat of tariff can also be useful in the sense that President Trump is trying to redirect investment out of Canada and into the US, which will have a disastrous impact on Canadian jobs and Canadian industries if we were to lose key investments from today, or even decisions made on investments that it can impact jobs down the road.
For sure.
So there's a lot of concern here right now.
And of course, in the mix of all of this is what the Bank of Canada has done. You were calling for lower rates. The bank did do another big cut, although it seems to signal here that this could be it for a while. Reading the tea leaves, this might be the bank on pause into the new year. Are you happy with where rates are now?
I'm glad that they did a decent cut this time around, but honestly, Amanda, the damage has been done. We got a softening labor market. We have businesses that have not been investing when they should have been and could have been. And we have workers that are suffering out there still with affordability issues. And these interest rates just made everything more expensive for people. So a lot of concern with slower economic growth and rising unemployment right now. And a lot of that can be attributed to some of the actions that the bank have taken with respect to rapid rate increases that we saw last year.
All right, Lana, we've got to leave it there. We appreciate your time today.
Thank you.
Lana Payne is president of Unifor. Coming up, rates have come down, but how low can they go? Stay with us.